All right. Well, happy Friday. I know for some people it's not feeling so happy. There's a lot of stress around our topic today. But our goal is to help you de-stress by giving you information that is reliable, that's practical, and that's digestible for lay people who don't speak insurance lingo. My name is Amy Bach. I'm the executive director of United Policyholders. And it is my absolute privilege to be able to present this information to you with help from an expert panel that covers all the bases of what you need to know right now on keeping your home protected when insurance options are limited and expensive. Our program today is brought to you through our Roadmap to Preparedness program and the funding that we have through Governor Newsom's Listos California program, and we're grateful for that. This is, I think, the fourth or fifth in a series of these webinars that we've been doing. And as things evolve and change in the California home insurance marketplace, you can follow the slide deck by going to the link here at our website. A quick thing about our organization. We're a 501c3 nonprofit. We have a Platinum Guide Star rating. We have a 32-year track record of expertise in insurance problem solving, disaster recovery, and resiliency. We are a trusted information resource for consumers and a respected advocate in all 50 states, plus the District of Columbia. We're funded by donations and grants. We're independent. We're not funded by insurance companies. Today's expert panel is myself. I'm a professional insurance consumer advocate since the 1980s. I'm an attorney, co-founded the organization, and I am heavily involved in helping solve the problems that are making it so hard for people to keep their assets affordably insured in parts of California and around the country. Very happy to be joined by Gabriel Sanchez with the California Department of Insurance out of Los Angeles. Hi, Gabriel.
Hello.
Phil Irwin, who is an independent agent with an agency in El Dorado Hills, but also on the staff of the California Fair Plan. Phil, thanks for being with us.
Thank you.
We're joined by John Wheatley, who's the VP of Insurance Services with Redwood Credit Union up in Santa Rosa. Thank you so much, John.
Glad to be here.
And then we have Robert Feldman with Coast to Canyon Insurance Services out of Malibu. Robert, great to have you join us.
Good morning, everybody.
And finally, we have Ruth Stroop with the Ruth Stroop Insurance Agency in Oakland. And with the exception of Gabriel and Robert, the other panelists have been with me on some of our previous sessions. And so it's been our journey with you to try to keep a very close watch on which insurers are open for business and which ones have been restricted and what your options are. And this has been going on for a number of years. So today's session is focused on what's happening right now. And if you are a living, breathing person, you might have seen some media coverage in the last couple of weeks about State Farm's announcement that they are going to stop selling new policies. And it really brought a lot of attention and some rumors and confusion. So we're going to be clearing all that up for you today. And really helping folks just keep calm and keep their assets insured. A resource, if you want to get professional help and you want to see which insurance agencies are sponsors, you can go to our directory and see. We don't have a whole lot, but John's agency is one and Carl Sussman's agency is another. Those are resources for you for getting more information. Okay, so you don't need me to tell you this. In some regions in California, prices are very high for home insurance and also business property insurance, and competitive options are very limited. UP and our partners are helping consumers contend. The California non-renewal moratoriums have been very helpful, but are expiring and have expired in a lot of areas. We'll show you the counties where they're still in place. We're not hoping for any wildfires this year. We're hoping there won't be, but if there are, then those moratoriums spring up again. They're tied to an event. So one thing that's a really important message for you to take away today is that a good insurance agent or broker can help you navigate and find available options more than ever, right? You know, insurers, a lot of people have been going to buying online and, you know, trying to buy direct, you know, trying to skip a middleman. But in this day and age, with this market the way it is, it's very hard for a consumer to shop on their own, especially because, as Ruth Stroop has pointed out to me several times, there are some insurers that you can't even access as an individual. You have to go through a broker. So this is that time when finding that good agent, somebody like the folks that are participating here, that are really keeping, they're not, you know, a lot of agents are believe me, they're having just as bad headaches as homeowners are, if not worse, because of course it's their living. So a lot of agents are very frustrated with the fact that it's just harder for them to place their customers with an option that they feel comfortable with, you know, a company they know and feel comfortable with it. So times are tricky for both for property owners and for agents. So finding an agent that is keeping their head above water and finding channels is more important than ever. The new normal means paying more attention to insurance than you would like to or have been. Great to know that the California FAIR Plan is a last resort option, but that if you want it to have sort of whole cloth coverage, you need to buy a second policy. We'll be talking about that. It's called a DIC, a difference in condition. Some people call them wraparounds, but these days people talk about a DIC to pair with a FAIR Plan. One point that's not on here, the California Department of Insurance is really working very hard to help you all get through this and help us navigate the situation. And they keep adding new tools, and we'll go over some of those as well. And finally, just a reminder from UP, because we go into areas where there have been wildfires and we teach free classes and we provide support for people to help them get their claims settled. We know 2/3 of the people who lose their homes in wildfires find themselves underinsured, which means that avoiding underinsuring your assets is still very important. And that's a tough message for me to give you, because I know that prices are high and that is really, really tough. But making sure that your dwelling is insured to value for what it actually would cost to rebuild is just as important as ever. And you shouldn't sacrifice that. Please take a minute to complete our California home survey. Let us know what's happened with you, what insurer you were with, who you're with now, what your premium had been, what it is now. Thank you. On our website, you can access the materials that we're talking about today. We have basic tips and lots of really good information, including the links to the California Department of Insurance's resources. The rules: your insurer has to give you 75 days notice before they drop you, before they non-renew you. Same thing, drop, non-renew. Most insurance contracts are 1 year, which means when they come up, when the year is coming up, 75 days before that, if your insurer has decided they're not going to offer you a renewal, they have to let you know. If you're not protected by one of these moratoriums, and they're not being discriminatory against you in terms of your ethnicity, your age, or your income level, and they're following their guidelines, then they are free to non-renew you. And the law does not allow anyone to force them to renew you. Now, why you got non-renewed had been a lot more important than it seems like it is now. So I'm going to start with John. Can a non-renewal get reversed today? Can a consumer convince their insurer, or can an agent convince the insurer once they've sent that non-renewal notice to change their mind?
Yeah, thank you. Fundamentally, yes. Non-renewal said, fix your roof. But I would also tell you that in today's climate, while that is fundamentally yes, we're not seeing we're not seeing the fix the mitigation, send back in the pictures or the results of the fixing to the carrier, that being overchanged. The non-renewal is still staying in place today. So it's really, really important to make sure that you're taking precaution to your house and the surroundings and the trees and your roof, et cetera, to not be put in that position when it comes up to renewal. Because even though if you fix it after the fact, there's no guarantee that the carrier will take it.
Right. And we've heard a lot of people being frustrated that, well, I did this and this and they still dropped me. And, we're working really hard to prevent that from happening. But as things stand now, that's still within the insurer's right. Ruth, do you have a different feeling about can a non-renewal get reversed? Or have you had any luck there?
We've had some luck, especially when because we're seeing a much heavier reliance on technology to slate these under non-renewals, and sometimes things just need the human touch. So there might be aerial photography and they photographed the wrong property. We had a client in a duplex and it just wasn't reading quite properly, so it picked up the wrong fire line score. So I encourage anyone I hear who's facing a non-renewal to start first with their agent and see if there's anything that can be done, and then understand absolutely you cannot cut back all the fuel near you. You cannot create a dual egress road when you're only on single. So there's a number of things that you can't change, and it's time to start shopping.
Yep. Thank you. Start shopping ASAP and try not to take it personally. There's just a few bits of insurance lingo that are good to know. I already told you drop, non-renewed, same thing. Canceled, that would be if they canceled you in the middle of the term, in the middle of the policy. And there are rules that prevent insurer from just canceling you for any reason they want. There are only specific rules that they can that allow them to do that. I told you that about the DIC, the gap filler. There are different kinds of insurance companies. There are non-admitted and admitted. And admitted is a fully regulated. That would be your Farmers, your AAA, your USAA. They are fully regulated by the state of California. Then there are companies that you may not have heard of. The one you might have heard of that's non-admitted is Lloyd's of London. They non-admitted companies are lightly regulated. They're licensed, but their forms and their rates are not regulated. So it's a little bit it's traditionally always been better to be with an admitted. In fact, for the reason I'm going to tell you in a minute why, but in today's market, it's sometimes you just can't, sometimes you just don't. If it's a choice between a non-admitted and a fair plan policy, that's a choice you need to think through, right? And one of the factors you can think through, and I know most people make their decision just based on what's the lower premium, but you do want to also consider both the quality of the policy. What is it going to cover? Sure, it may be cheaper, but you may be sacrificing coverage that's important. The other thing that is a concern with a non-admitted is that they are not part of CGA, the California Guarantee Association. And so all the brand names that are part of CGA, meaning if they were to run out of money, there would be this backstop, CGA, to pay your claim. So we've only had one insurer in the last, 20 some years run out of money. And that was one small insurer after the fire in Paradise, the Camp Fire. Merced Property Casualty didn't have enough money to pay claims. So people had to go through the California Guarantee Association, which provides some backup. But again, if you're with a non-admitted, they're not part of that. So it's more, if you're going with a non-admitted, it's just more important that you're working with an agent that can really assure you that they've got the financial strength that you need. Protection class is a little bit like a risk score. Risk score is a number assigned to to your home's wildfire risk level. The difference between a protection class and a risk score, actually, why don't I give Phil a chance to explain that? What's the difference between a protection class and a risk score?
That's probably a good, there are some similarities. So I really couldn't speak to that.
Okay.
If somebody has a better response.
I'm sorry. I promised I wasn't going to throw any surprises at y'all. Anyone in my panel want to explain the difference between a protection class and a risk score?
I can do that.
Great.
So protection class refers to the fire department response time to your location, the distance of the hydrant, the size of the tankers, whether it's volunteer or pay or professional or some combination. And protection class always goes from 1 to 10, 1 being the best. And it's no guarantee, but it is information that insurance companies use in underwriting to understand the fire department response. The wildfire risk score has to do more with fuel, access, and slope. So location specific fire characteristics and not the fire department.
So risk scores, which we'll be talking about in a few minutes, is a relatively new phenomenon. In the last, 10 years or so, private companies have popped up that are selling risk scoring systems to insurers. The two main ones, CoreLogic and Veris. So Fireline Score, you hear about that. Risk scores are part of what's causing some of the crises that we're navigating, because they just made it really easy for insurers to sift through what they would take and what they wouldn't take, and it's sort of like a scarlet letter. And again, you heard Ruth say if it's a Fireline score, it's only based on 3 things that people can't control, right? Your fuels, your slope, and your access. I mean, you can control fuels, the brush a little bit, but in some ways not. So, risk scoring has been definitely a part of what is happening here, is because insurers will use your risk score as a reason for non-renewing you. And until the Department of Insurance adopted their recent regulations requiring insurers to tell you what risk score they're using for you, people had no idea, like, well, what is this, and why, and can I fix it, and what if it's wrong? And so we're just in the beginning of really giving consumers much more access to knowledge about what they're scoring, how their insurer is seeing them. So where can you turn for help? You can turn to an independent agent or broker. So that would be somebody like Phil or John, or you can go to a captive agent, somebody like Ruth or Robert. And these days, companies like, Farmers or Allstate, I believe, and are allowing their agents a little more flexibility than they used to. So Ruth can sell you a Farmer's policy, but if she can't sell you, if Farmers won't insure your home, she still has some options for you. Robert, is that the same for you? You're an Allstate agent. So if Allstate won't take a client, can you put them with another? Do you have another option for them?
We work with multiple insurance carriers, including E&S carriers. Personally, I'm more in the E&S space with all the different non-admitted carriers.
Okay, so E&S is excess and
The
surplus.
non-admitted.
It's another word, right? In insurance, there's lots of multiple words for the same thing. So you can place people with a non-admitted, and you do your diligence to make sure they've got enough money.
Yes,
right?
For example, Northlight is a company that we work with. I work with extensively, which most brokers don't have access to. We're writing across California except 3 counties. So we are still moving full speed. Yeah.
Okay. And then, so those 2 kinds of agents, and then you have the Department of Insurance website, and then you have the California Affair Plan. How is our organization helping? By hosting webinars like this, by all the publications we've got on our website, by monitoring the marketplace, keeping our ear to the ground, who's in, who's out, keeping our website and info updated, And by being your voice and your advocate, trying to, always speak up for the importance of there being affordable, available options for property insurers, promoting property owners, sorry. And we have been working very hard to get you mitigation discounts and to contribute to all the dialogues that are going on with insurance companies, with the legislature, on, well, what else can we do to fix the situation, right? So we are one of your voices in those conversations. We are working very closely with Commissioner Lara, his team, our agent broker volunteers like these folks, firefighting agencies, the fire safe councils around the state, the Institute for Home and Business Safety, IBHS, which is their a scientific research entity that does testing on they burn fake houses down, they subject houses to model houses to high winds, and they unrolled their wildfire prepared home program here in California. They are funded by the insurance industry. So the good thing about IBHS is they are true believers that you can reduce wildfire risk. And this is how. And because they are selling that message along with us, insurers are hearing it. They're coming around more slowly than we would like. But there's definitely, we are all moving in the direction that we're not powerless against wildfires, and there's things that people can do and need to do to their homes and their communities, and insurers should recognize those things and be more willing to write homes in those areas that are actively mitigating, and also give people a break on their insurance. And we are talking to insurers all the time, trying to find common ground. We are very, very involved in this fight, and we are so we're very empathetic with the stress of getting, losing your insurance and the price tags, the problems that condo associations are having. We hear you, and we are doing everything we can. So Gabriel, thank you so much for being with us from the department. If you want to just review the points on this slide, and share how the department's helping.
Great. Thank you so much, Amy. And I really appreciate the introduction as well. There's been a lot of hype out there, and it's not helping. And we're really focused in the department of how can we protect consumers the best? That's our mission, is to protect consumers. And so a lot of the work that we're doing is some things you've already mentioned, including enforcing the 75-day notice, enforcing non-renewal moratoriums that happen after wildfires and the governor declares a state of emergency. We're requiring insurers to reward mitigation. Again, this is the new regulations that Commissioner Lara enacted last year. We want them to disclose their risk scores. And again, from some of the comments earlier on this panel, just knowing is one of the first things you can do, and to ask those questions about your risk score, talking about what things can you change around your home, whether it's creating defensible space, it's trimming brush and other materials you might use for a roof if you're able, things like that. Our main goal, and the experts at the Department of Insurance are really focused on making sure all these rate changes and applications are justified, and that consumers are not paying more than they're required to for the coverage that they need. And we're always talking with insurance companies and their leadership to see what can we do, how can we work better together in order to help consumers. And so we're doing everything that we can to help consumers. And I just wanted to also add, if anyone ever has any questions, always feel free to reach out to the department to ask us questions. The numbers right there. We have a hotline. We have a chat tool as well. We encourage you to reach out to us for any questions, because sometimes it's better just to know.
Yeah, thank you. Okay. And so what California Department of Insurance shopping tools are available?
Yeah, great. If you go to our website, we have several tools set up, essentially just to to get you an idea of what you might be paying. And we have different comparison tools. These are not exact because, as you all know, each home is different. There's different locations and the like. But this is more, the intention of these tools here is to give you a ballpark, a range of what you might be paying and some other steps you might be able to take in order to lower your risk score and in many ways, lower your premium cost and other things. There's also information here on just, again, Amy has mentioned, versus types of coverage, what you might do, the differences of going with one company versus another in terms of coverage and offering that might help in terms of like premium reductions, or sorry, not premium, deductibles and the like. And there's just a lot of information. I encourage everyone to take a look.
Thank you. How has the legislature helped so far, Gabriel?
Sure. Great question. Again, we understand that there are both short-term issues that homeowners are dealing with, but then there's longer term issues related to climate change. And we're seeing a lot of climate change intensified weather events, including wildfires, droughts, what have you. And so the legislature's been helpful, as well as the governor, in putting more funding towards mitigation of risk. That includes, brush clearing and other efforts to do these things. And so that's how we're trying to address this issue in the long term. How can we work with the governor's office? How can we work with legislative leaders to lower risk overall in California? And that's the long-term solution to help homeowners today and in the future.
Yeah. So we have these moratoriums in place. So these are the counties where they're currently in place. And if you have questions or you don't remember this, you can go onto their website and you can put your zip code in and find out whether there's currently a non-renewal moratorium in place in your area. Okay. So this is relates to your wildfire risk score. We've been talking about that. Now, under the current regulations, your insurance company has to tell you what your risk score is, if they're using a risk score system, when you apply or before a renewal, and then tell you how you can lower that score. You have a right to appeal if you think it's inaccurate, and there's the contact information for the Department of Insurance. This is very new. This just took effect. So I think insurance companies are probably still in the process of retooling to be able to answer these questions. And if any of my panelists, I know I already asked y'all whether whether somebody you feel like you can change their risk score. If anybody on the panel wants to comment about this slide, now's your chance. Okay, we'll move on. So Robert, we already covered what a risk score is. John, how do you find out your risk score?
We use a service through Hazard Hub as the vendor company name that we use to get the score. And that gives us an idea of what carriers and companies we might be able to place the coverage in.
Okay, and I think I did ask I asked about the difference between a risk score and a protection class. So maybe I should give you a chance, Robert. Is there anything you want to say about risk scores for your clients?
Really, risk scores are really the indications. When I'm this week speaking throughout California with a lot of the realtor associations, the fire scores are, really what we discuss, because it makes a big difference on fire scores. Knowing the fire scores are very important to have, especially when they're looking at buyers or, or if they're listing sites, to know where the market is, because the fire score is going to dictate a lot of that, is who's going to be in, who's not.
Okay, and Ruth, I think you answered this earlier, but is there anything you want to add on whether or not you can change your risk score? Now, again, we know the department has now, got this regulation. They're going to have an appeal process. We don't really know what that's going to look like for the insurers. But Ruth, anything you want to add on this?
I think it's only going to become more sophisticated over time as we continue to rely on technology. The current risk scores don't include wind as a factor, and I think that's been such a huge factor in some of our larger fires. And so expect things to change and to become more sophisticated and refined.
Yeah. And I will say this, for people who are like, what is this score thing? It's a lot like a credit score in a way. It's, and with a credit score, you can get your credit report, you can see whether they're dinging you for a bad debt, and you can fix if you've actually paid that debt off, or let's say or you look at your clue report and you see that they're dinging you for a claim that wasn't your fault. You can contact the choice point, and you can say, well, this is wrong, please fix it. So this is going to be kind of like that, that you'll be able to hopefully at least make an argument to try to improve your risk score. But again, one of the great ways of reducing your risk score is by hardening your home and creating defensible space and living in a community where other people are doing the same thing, right? There's a lot of energy, time, and money going into reducing wildfire risk in California. We've got the IBHS Wildfire Prepared Home Program. We've got the Safer from Wildfires program that the Department of Insurance and CAL FIRE have put together. We've got Firewise USA, and then we have my organization's WRAP initiative. And that's where we have been meeting every month for about going on 2.5 years now, with stakeholders from all around the state, sharing ideas, information, best practices. And then we worked very hard to try to get all the experts on the same page about what actually does move the needle for making it less likely that your home is going to be damaged or destroyed in wildfire. So you got the short list there on the left. And then you can see in the middle, the picture of fences and gates. One of these things that we are all learning together is that having a wood fence right up to that touches your house is a little bit like a wick on a candle. So if you want to interrupt that and put metal in between, to minimize the chances of the fire just traveling right there. Installing screens to keep embers out is super cheap, and definitely a very like a no-brainer. Like you need to do that. So if you have vents in your roof, openings around in the eaves, you want to make sure that they are screened. And then you can see the rest of this. So these are all this is what our working group has been advancing. And then again, we got a grant. This Listos grant allowed us to set up an online resource center that you can access at our website, that will lead you to local resources, mitigation grants that might be available, mitigation help for hire, and other types of leads for getting on the mitigation bandwagon in your area. Okay, how agents and brokers are helping keep homes insured when options are limited and expensive, doing what we're doing today, assisting and educating their customers, helping people be creative with their policies to tailor, try to and then, like I said earlier, combing out, proactively combing the marketplace for possible options, helping you understand Fair Plan, helping you understand your DIC options, and then keeping my team informed, for which I am extremely grateful. What are the qualifications you want in an agent? Integrity, honesty, obviously, access to markets, and staying, you want an agent who is up to speed on all the things we're talking about today. If you talk to an agent and they don't know what a DIC is, or they've never placed somebody with a Fair Plan policy, you might want to talk to another agent, because now's the time where you really need a knowledgeable, like somebody who's not just kind of trying to put their head in the sand and, crying in their beer. You really need somebody who's hustling. Okay. So we talked about the difference between an admitted and a non-admitted, and that the admitted companies are covered by this insolvency protection fund. Robert, does SIGA matter? Does that matter to you and your clients?
What's interesting is really it depends on the different levels of homes right now. because in the higher or bigger homes going on across California, it's especially in fire zones, if you're over 7,500 square feet, there's going to be it's going to be all in the non-admitted space. So it's getting to that point. I think what happens is there's a real disconnect, because I think there's a lot of people that are going to be on the California FAIR plan also based on fire scores, and that fit that criteria. Basically, the main thing that is really scary is, as we discussed, is that AB bill 2756 for the 80% insured to value requirement with the California FAIR plan. I think that's the number one thing that brokers are still missing at this point. Insurance
Meaning
brokers,
that,
knowledge.
right, so just for lay people, so I think what he's talking about is there's something called a co-insurance clause. It's a little in the weeds here, but the bottom line is, if your structure isn't properly insured, if it's insured for less than 80% of its value, that can become a problem if you make a claim, right? So
Well,
that's
it reverts the policy to actual cash value, which is a really serious issue.
yeah.
So whether it's underinsured or not having enough insurance, it's a really big issue. But again, with the back to your original question, the guarantee association, it is important, but I think a lot of times it depends on the market, depends on the size of the home, and there's a lot of moving parts, is what I would say.
Yeah. And so on this page, we've got a link here we just name a few of the brand names that are familiar to you, and the fact that, those 4, Farmer, State Farm, Allstate, Nationwide, are all restricted. There's lots more that are restricted. But what we're trying to do here is, give you not just the bad news, but like the practical guidance, right? But if you go on the DOI website there, to that link, they'll show you the 130 or whatever it is, licensed insurers that are in California. That doesn't mean all of them are an option. It just means that, to reassure you that, there's life after State Farm, breaks up with you, as it were. So Phil, does SIGA matter? Anything you want to say on that?
No, I think we've covered that.
Okay. All right. So let's talk about the non-admitted surplus line, specialty, E&S, all the same thing. These are just a few of the names, with some notes. So Ruth, what do consumers need to know about these non-admitted, or about insuring your home with a company that you've never heard of?
Well, that's a great question. There's a couple things. One is they can ask for the AM Best score, so they can, they can get the financial strength. The other is they can ask their agent, how do they work with the claims department? What are they to expect in the claims handling process? And then understand that these carriers make markets, and they change all the time in response to the risk in the market. So once you're in the non-admitted market, your job is to continue to work with your broker to shop, because every year we have to turn in paperwork that says at least 3 companies declined us, for at least 3 admitted companies declined coverage. And sometimes a new carrier comes in the market. Sometimes your carrier gets full. Some carriers will add a new feature to the policy that's like a poison pill, and maybe you want to change. So it's really important, if you're in the non-admitted market, to review your policy annually and to make sure you have your claims information, because a lot of people, it's not just like 1-800 national company on the internet. You need to know your policy number. You need to know the claims phone number and the process.
Right. This goes back to my original point about you have to pay more attention now, unfortunately, to your insurance than you did. John Wheatley, anything to add on this? I mean, I know that for most insurance brokers around the state, that have been used to putting their customers with the brand names that they're familiar, this is a difficult time. So anything that you can add on placing your customers with brands they've never heard of?
Yeah, I think Ruth articulated that piece really well on, if you're placed with that, it's critical to do the review. But I think what I would like to add is, today, any policy you have, standard or not, you cannot afford not to have that policy reviewed with your agent or broker. To Robert's point on making sure you're at least 80% to dwelling value, insured value, you just can't afford now to not have your policy renewed, whether it's a preferred market or a substandard market.
Yep. Okay, and then just Robert, what is Northlight? And is it the same as Allstate? What's the
No.
difference?
It's an E&S carrier, non-admitted carrier. That's part of the Allstate family.
Okay,
So it's a policy that actually is in the market. I've joked about a hybrid because it has some similarities to admitted, but it's not an admitted product. It has the Allstate Claim Center is actually, so Allstate Catastrophe handles claims, which is very unique for that situation. Also, at the same time, it has a lot of the underwriting guidelines of Allstate. It's a general rule of how they look at things and what risks they're willing to take. So
Okay.
it's a very good E&S market, but it's one of many. That's what we say.
Okay, all
Yeah.
right. So this is the Department of Insurance has something called the LASLI list. It stands for the list of approved surplus lines insurers. So now we all know surplus lines is just another term for non-admitted or E&S, right? Same thing. And that's a place you can go again to get company names if you really want to go deep here. John, we are hearing that some insurers are now requiring in California their customers to pay the full premium up front, and they're no longer offering installment payments or premium financing. Can you talk to us about that?
Yes. We have several carriers that we work with that on new business that want either the full pay, or if it is an annual policy, a certain percentage down, maybe 6 months down, and then go to a monthly on the 7th month. We are seeing a lot of our annual auto policies switch to 6-month term policies, and not be allowed to be on a monthly pay until it renews. We are working with our credit union to make financing options for people that are, can't afford the full payment, to be able to make a monthly payment called premium financing. But it is an issue where the carriers are looking to try to get their full premium to help mitigate their loss reserves that are happening right now in the industry.
Mm-hmm. Phil Irwin, is the Fair Plan offering? I know that you were working on it. What's the status of installment or payments for a Fair Plan policy?
There are some technology updates that are coming, and that's definitely still in the queue or the work list. So I don't have an exact date on that item specifically, but I know that's on the list.
We're moving in that direction.
Absolutely.
Okay. All right. So as a lot of you have already heard the term, the California Fair Plan, it's our California insurer of last resort. One thing to understand about it is it's not an insurance company. It's not a state of California insurance company. It's an association. I sometimes of the insurance companies, admitted insurance companies doing business in California. So I sometimes talk about it as a forced co-op, right? The legislature said there was a situation in the 60s where people in the inner cities in LA couldn't get insurance due to rioting. And so because under the congressional rules, if you have a mortgage, you have to have insurance. The legislature said, okay, we're going to create an option here for these people that can't get insurance. So they called it the Fair Plan, fair access to insurance requirements, meaning your mortgage insurance requirement. But then that plan, and it's so I say forced co-op because if you are a Farmers, Allstate State Farm, admitted and fully licensed and regulated, you have to participate in the Fair Plan. So it's more important now than it's ever been. It's morphed. It's no longer the insurer of last resort for people in urban areas. They're actually doing fine. It's become the insurer of last resort for people in rural and suburban areas, which is probably most of the folks in this audience today. So we offer basic information about the FAIR plan, but I've got the man here, Phil, who's going to walk us through the basics.
Great. So, believe it or not, the FAIR plan's goal ultimately is to see the market restored and for the FAIR plan to not be needed. But today, the FAIR plan is here to provide access to basic property coverage when it's needed, ensuring that all Californians, including those who have been threatened by wildfire areas, are able to get the fire coverage to provide them with peace of mind that they deserve. The FAIR plan writes basic property insurance as a named peril policy, including fire coverage for homeowners who cannot obtain it through a traditional carrier. The FAIR plan is a temporary safety net for homeowners established to ensure all homeowners have access to fire insurance when other insurance won't provide it. And again, you just touched on it. It is a private association comprised of all insurers licensed to write property insurance in California, and is overseen by a governing board that includes the California Insurance Commissioner and insurance company executives. Basically, the FAIR plan works by providing insurance to basically any home, as long as it meets the insurable condition. And really, the primary issues would be there is major unrepaired damage or illegal activities that are blatant, that are evident to the eye, as well as if the home's going to be vacant for more than a year, then it would not be a fit. So really, other than that, everything else would fit within the guidelines for the FAIR plan. It's important that the FAIR plan is required to have actuarially sound rates to cover risks and exposure of anticipated losses.
And so it's fair to say that because the FAIR plan is what we geeks call an adverse risk pool, meaning everybody in the FAIR plan is considered to have a higher than normal risk, that the prices are going to be more expensive than what you would pay outside of the FAIR plan.
Correct.
Right.
And the next slide gets into that a little bit too, but basically the FAIR plan is writing everything that nobody else wants for a reason, and again, that's another reason why it's more expensive. And the next slide gets to that. We'll touch on that a little bit more. But basically the way it works is the FAIR plan, like I said, is a named peril policy, and it covers the items, the primary items that are in your a standard homeowners policy, and the two key items that are missed there are the water damage and liability coverage. So that's why you couple the two policies together, the difference of conditions policy as well as the California FAIR plan, and it gives you comprehensive policy. There is abundance of competitive options throughout the state for DIC insurance today. But again, just like anything else, and it's already been mentioned, probably more so now than ever, it's important to be with a professional that really understands the process, is willing to sit down and go over everything line by line, making sure your home is insured to value, making sure you're starting out with the right amount of coverage first, and really understand how each component of your policy works to make sure that that's what you expect, and that's what's going to help you sleep good at night. You go to the next slide. This really does illustrate what we just touched on, but the FAIR plan is more expensive because they can't pick and choose which risks they insure. They're basically required to write everyone as long as they meet the guidelines. The folks that are coming to the FAIR plan are homes that are in areas that other insurers don't want. Other carriers, traditional carriers, can strategically manage their portfolios for concentration where the FAIR plan cannot. So there are obviously in the wildland urban interface, I think makes up almost a third of California. So just imagine what the concentration of the FAIR plan looks like today. Let's see. So it's important, well in advance of any renewal or non-renewal, to work with an insurance agent or broker that's going to help you shop around. You want to look beyond, even if, this is advice I always give, is if you land on an alternative that makes sense, that you can swallow, keep looking, because you can always come back to that one, because it just doesn't hurt to get other schools of thought and other opinions, and really make sure that you're paying attention to each component to make sure that things match up to where you would expect it to. And these are just some recent changes and what's coming. So some of the latest enhancements, we launched a new fair plan training course. We've got farm coverage, increased commercial coverage, online credit card payment options, and claims pay. And then coming soon, and this is a big one, obviously, increased commercial coverage limits to 20 million per location, and monthly payment options. There's that one, and home hardening discounts that are still pending approval from the Department of Insurance. But that's, and I know there's a few others items that they're working on that didn't make the list. And then, did you want to go through the, these are some options that you can add on or look at more specifically. But again, this is just from a name, really describe it as an a la carte policy. You can really just go into everything and each component and make sure that it meets your needs and you really understand how it works. I would say probably the biggest thing I caution people about, if you think about the fire experience we've had, is fair rental value as an example. You want to look at, you want to make sure that our evacuation periods these days in our recent fires, can be anywhere from 3 to 4 weeks, more or less. So it's much of a bigger factor than people realized. That's sudden, and it's really, you just have to go, and it's for longer periods of time. So again, make sure that's a piece that is included, and you're talking to your broker about for your coverages. Make sure that meets your expectations there.
Thank you, Phil. And I feel like I need to remind all of you who have tuned in today to this webinar that it could go without saying, but I'm going to say it. The prices, the price increases we know that people are struggling with are very painful. I think a lot of people feel like nothing's changed. My house is the same as it was. And why now is my insurance company saying that I have to pay, twice or 3 times what I've been paying? And that just doesn't feel fair. And so I think, we're with you on that. We see the reasons why this is happening. We're trying to mitigate it with the mitigation discounts. We're trying to we fully support the Department of Insurance in their efforts to keep a balance. Insurance companies are saying that they need more rate increases faster. And I think, the department has been trying to keep a steady hand and not allow excessive rate increases. But what we're seeing is that a lot of insurers are not happy, and that's why they're not happy with the rates they're getting in California, and they want more. The department has been granting rate increases, but they are trying to protect you. So we're in a very challenging situation right now, and pointing fingers is really not helpful. We're just here to tell you, even though I felt like I had to say this now because here we are telling you to buy, a DIC, a supplemental policy, and, buy these enhanced coverages. And that's because we want you to be protected. And we understand that those increases can cost more money, and you're trying to afford the policy as it is. So a lot of this really does come back to working with a professional who can help you and using our materials. Everything UP offers is free. So like if we say, well, raising your deductible is a really good way to bring the cost down, that's because we have watched how that works. Don't file small claims. And then, with it's most important is to ensure your dwelling for replacement value and try to get it as accurate as you can. If you have to cut coverage, maybe cut contents coverage, cut other structures coverage if you can. We'll get a little bit more into that in a minute. Just on this DIC supplemental policy, understanding that that's a second premium that people have to pay. Robert, what's covered and excluded in a DIC? What can you just sort of distill your advice to your customers on buying a DIC?
DIC policies are really important, obviously, because a fair plan has limitations. As we originally, as Phil was describing, as the policy of last resort is the California Fair Plan. It fills in liability and a lot of other coverages. It's important to have, because what happens is, but I would say one of the biggest myths that happens in California about DICs is that consumers believe that DIC policies extend as an addition to the California Fair Plan. And that is one of the biggest myths that there is. A lot of consumers are buying policies and leaving coverages specifically on the DIC policies. And then in the event of a fire, they find out they don't have personal property coverage because it wasn't listed on the California Fair Plan. They don't have additional living expenses and these things in this nature. It's really important to understand, and that's why, as you mentioned many times, having somebody that knows truly fire zones. I live and breathe in fire zones across the state. So that's what we do. Having the knowledge of what the California Fair Plan and the additional endorsements. I mean, Bill did a great job today talking about that very thing. There's a lot of incredible endorsements that will do reviews on Fair Plan policies that people don't even have. Debris removal is the scariest one. I mean, Phil, do you agree with that? I'd say the one that people don't add on, not having debris removal is just scary when I see those on the policy.
Well, and the easiest one that I would say, and it was actually at a Malibu Fire Alliance meeting, you know, where it's a simple, the replacement cost being checked. It's just a matter of checking the
That's it.
cost settlement option. It's a simple box. It's not an expensive component, but it's just the thoughtfulness of.
Well, and that just, again, it goes back to what we were talking about earlier, making sure someone, it's not their first time they wrote a California Fair Plan policy. You know, this should be somebody that's in this industry that understands it.
Yep. Okay, anything, Ruth, that we missed on DICs?
I want to reiterate with Robert that a lot of the things that people need, especially for water, come from the endorsements on the DIC policy. So things like a sewer and drain, backup sewer and drain coverage, equipment breakdown, a lot of things that are also really part of the needs of somebody who lives in a high fire area are there. I also want to make sure people understand that the DIC policies don't just come for homeowners. They're also available for people in income property who are having problems getting insurance, and for people who have properties that have unique registrations, like a probate property or an LLC. So we can get DICs for vacant properties. There's all kinds of reasons why somebody might need a DIC, and there's occasionally times when somebody can skip it because they can add liability coverage to an existing homeowner's policy. So it's important to, you know, all of us here today are saying, you know, please talk to an agent, please talk to an experienced agent, and an agent who's making a point of insuring to these risks, not somebody who's been avoiding them and not jumping in.
Yep. Amen to that. So a message from your friends at United Policyholders: no matter which insurer you end up with, again, your coverage A on your dwelling should be enough to replace your home with one of similar size and features, because what we're finding is the calculators that insurers are giving their agents to use, and that what they're are coming up low, and they're not keeping up with current pricing. So, you know, they may have your home insured for $200 a square foot, and you ain't gonna find somebody to rebuild it for that price. So it's just important to have those conversations. These are the things that matter. You want replacement cost over actual cash value. You want extended if you, as an extra safety net. You want code compliance, so that if you need to do repairs or rebuilding, you have to meet code, and if you don't have this coverage, then your insurer is not going to pay for those enhancements, those upgrades. And then paying attention to the deductible, always important. Policies have sublimits and caps on things like guns and jewelry collections and silver, furs, cash. Just know what they are. I'm not going to go through all these questions right now because we're over the hour, but we have a little bit more content I want to cover. But just know that you can come to our website and anytime and go to the shopping help section and look at our home insurance checkup, and you will find these questions. And our recommendation is that you ask that when you are shopping for insurance, or you're talking to your agent or talking to your insurer, that you always have a piece of paper and you're taking notes, and you keep those notes in a safe place. You ask good questions, you get the answers, you keep those good notes. All right. A few tips to save money. We've been talking about this, the difference between an agent that's overwhelmed and freaked out versus one that's like on it. A proactive agent or broker is what you want. Do as much mitigation as you can, raise your deductible when you're shopping, get quotes at different levels. I carry personally a $5,000 deductible because that is that's a good way to bring down the costs, and I pay small claims out of pocket. And that's how a lot of consumer advocates see. And so and then this is the tricky one. We recommend that you try to reduce or eliminate buckets of coverage you can live without, such as high dollar limits on contents and other structures. But some insurers won't let you reduce those. They tie them to the dwelling coverage. So I want to go through with all of the panelists. Any words of wisdom for saving money in this very challenging marketplace? I'll start with you, John.
Yeah, and I think, using that last bullet point, if you're struggling, to pay the premium with the way the policy was written and proposed in the quote, you start looking for options to reduce. It goes really back up to bullet point number 1. You can't afford not to check in with an agent or a broker because each case is different. Customizing your, high deductible, great. Maybe it's because, your golf clubs and your guns are on a scheduled item. Maybe we take them off that schedule and give them so much limit. But it really becomes a case by case. How do we customize your policy to lower the premium where we can and accept that risk? And that's a discussion that needs to be had together.
Okay, Ruth, any tips to save money in addition to what we've already said?
When I think about a policy that's expensive because of location, I really ask people to think about what would they do next. So many people we talk to have had the same insurance for the last 40 years, and so they haven't had to stop and think about this. I call it estate planning for your house. So would you want to rebuild if there's a one house, if just your house is damaged? How would you feel differently if your neighborhood was burned down? Were you planning to move, downsize, change location anyway? And to really think about your coverages in terms of your rebuilding strategy. In the past, we never thought about that. We just plopped on something to comply with our bankers' requirements. And today, consumers want to be more thoughtful about what's next, because that will help them design a policy that will help them transition. God forbid they do need to use the policy and have a large loss.
Okay, Gabriel, any tips that we haven't covered?
So many great tips. Really appreciate the panel. I think the other tip I would add is just that take the time in many cases to do the comparison shopping, even if you're not necessarily, if you're happy with your insurance company, but still take a look. It's always helpful to see what's out there. And again, like the number 1 bullet, find an insurance agent or broker, but do some research on your own and plan to spend a few hours of your day, maybe longer, to either take notes and ask yourself those questions of just what's out there. And so that way you can compare, because really we want to make sure that you understand insurance companies work for you. You're paying a premium. You want to make them work for that. And you want to be able to go out there and get as much information as you can. We're there to help.
Thank you. Phil, any words of wisdom on saving money that we haven't covered?
Well, it's out of the box, but it's outside of the box, but I'll put it out there if it fits. So if the sole item that's pushing your home to a protection class 10 is the distance of a fire hydrant not being within 1,000 feet, work with your irrigation district and your neighbors to lobby. Most irrigation districts have a process to where they will propose to install additional hydrants. So sometimes that's worked a couple times. Then all you have to do is get the fire chief to update the ISO mapping. It's not an overnight process, but I've got a couple examples of where that worked and it cut their premium in half, because that factor going from a protection class 10 really made that big of a difference for them.
You know, okay, Robert, any final words of wisdom on saving money that that we haven't heard?
Really, it's more about just in general. Right now, market is obviously has a lot of challenges. The market. The thing that I've been speaking about up and down the coast is that there are still options. So the very first thing is, I think a lot of times media in a lot of places like to make things like the sky is falling and the world's coming to an end. There are options right now. And long story short, it's going to be, the market's going to change. We're going to be able to do things and fix things overall as time continues to move on. Just knowing your rebuild costs, it's going to be the number one thing. Knowing your fire score, knowing your rebuild costs, knowing that the sky isn't falling, and that there's going to be, we have to continue to work in that direction. Those are the three things I say to consumers all the time, even realtor associations across the board.
Thank you. All great. Just a few reminders. I know we're over by a few minutes, but we've got such important things to impart. I want to make sure we get through all of it. Yes, insurance is worth it, even if your lender isn't requiring it. We are seeing more and more disaster victims coming in without insurance. If they paid off their mortgage, they just couldn't deal with the price tag. We understand it, but try to avoid that. Just a reminder that it's a myth that FEMA is going to bail you out. It's needs-based. The maximum grant is $41,000. The average grant is $5,000. So SBA loans are great, that they have to be repaid. And so really it's insurance that makes it possible to be able to rebuild if you are unfortunate enough to lose your home in a fire. So despite the limited options and high prices, we say be prepared, not scared. Get educated, seeking out a proactive consumer-oriented agent or broker, avoid underinsuring your dwelling, do comparison shopping, all the things we've been talking about. Create a home inventory, store it safely. Just take your phone, go around on video and narrate. Here's my bedroom set. Here's our silver. Open the drawers. Here's our rug, and that, just having that inventory is a really smart, practical, easy, cheap, free thing to do. Help your community be fire wise and fire safe. Mitigate. Take steps to harden your home. Visit our RAP Resource Center. I want to thank our expert panel that have been just absolutely terrific. I want to thank our agent sponsors that are in our professional help directory, including Carl Sussman, who was on a lot of our earlier programs, and everyone who is with us today. Just really great information. Here's the main landing page on our website, where we've aggregated. Here is our renter's insurance shopping help resources. Our website, we've got your back when insurance matters, and we've got your back now. We're in this with you, and we feel your pain, and we are doing everything we can to help us get back to a healthier, competitive, affordable property insurance market here in California. A reminder that being disaster ready is the healthiest thing you can do for your household and your finances. And I just want to say one last giant thank you to my panelists, to my staff, Carolyn Winter, Katie Oliver, Emily Rogan, who've been helping with today's program, and all of you who took the time to listen to us talking about no one's favorite subject. So thank you so much, Phil, Ruth, John, Gabriel, and Robert. And I bid you all a good rest of your day. This recording will be up on our website, and you're welcome to access it anytime, and you can share it with friends, relatives, colleagues. And if we will be having further sessions like this, and I look forward to seeing all of you then. Thanks. Signing off.